It is a better start to the day market-wise, but even if you don't have money directly invested, you are going to be affected by these dramatic drops you've been hearing about since President Donald Trump's so-called Liberation Day last week. Record low closings in global markets, trillions of dollars lost, and talks of recession make headlines, but what do they mean for you? Here to give us a primer on the stock markets and how politics are affecting portfolios, potentially pensions, we're joined by financial commentator Patty Levitt-Reid. Patty, nice to see you this morning.
Hi, Anne-Marie. Thank you for having me.
Okay, well, thanks for being here to bring us up to speed. So when we read headlines like this one from Forbes, stocks lose $9.6 trillion. What happens to that money? Where does it go?
Well, it literally is wiped off the valuation of a stock. And here's the thing. We have what's called, and I use this term loosely, economic globalization. And what I really mean by that is that stocks, I guess, trade across borders and they have valuations. And so when people start to sell, those valuations will go down. And, you know, people get very, very concerned about this. And what can happen is you can have, for example, because they cross borders, you can have supply chains or regulatory issues such as tariffs impacting markets right around the globe. So in some cases, when you have panic in one market, you get panic in another. If you have euphoria, you get euphoria in one market, people buy back into the market. And so there's really, I keep getting asked, where can I hide in this market?
Where can we hide in this market?
Well, you know, okay, so let's just back up a bit. Okay, gold is the typical safe haven. The U.S. dollar, that safe haven status is a little wobbly right now. Bank of America, for example, sees gold hitting $3,500 an ounce by the end of 2026. It's trading just below $3,000 an ounce now. But I think the bigger picture is each of us should look at our portfolios and say, where are we invested right now? Portfolios, typically, when you talk to an advisor or a planner, they will say, we have built your portfolio to weather ups and downs. Markets typically have a pullback of 10% on an annual basis. When I look at the S&P TSX, the one-year return right now is 2.6%. 6-7% is positive. The 5-year return is 10.92%. So when I say to someone, if you're going to go into the stock market, you need a reasonable time horizon. Well, that time horizon typically is about 5 years. But that we can't be naive to what's going on. I'm talking to our advisor this afternoon, and I just want to say, are we still aligned to our risk tolerance, to our protection of the wealth that we have? And do we have enough cash to weather this storm so I'm not selling out of a position at exactly the wrong time? And so I think everyone is sort of, okay, how do we get through this?
Right.
Because this is different, Anne-Marie. This has been created by one person.
Right.
The U.S. president.
I wanted to get to that in just a moment because that is the deciding factor. We're talking about tariffs. There doesn't seem to be a clear path of what he's looking for from various countries, so it's tough to negotiate, tough to correct. You know, you talked about a time horizon. Speaking of time, what about people who are nearing retirement and they are watching not their savings vanish, but they are watching their investments dwindle? What advice do you have for them, or what would you caution them?
Well, again, I would look at your portfolio, and I've often said we should never be invested in one country, one company, one sector, one currency. Diversification does matter. You know, in some cases, people will have the luxury, and I say the luxury, of saying, you know, we may postpone retirement for right now till we get some clarity around our financial situation. Others are in retirement. They're putting off large purchases. They're making very conscious decisions. People are very aware of what's going on. But let's not forget, we still have monetary and fiscal policy by the Bank of Canada. Bank of Canada is expected to cut rates 2 more times. There is no guarantee that we are going to go into a recession. I know there's a great deal of talk about it, but our inflation right now is fairly anchored. The consumer is still spending, albeit hesitantly. And so I think there is justification for a cautious tone, but absolute panic right now, if you have a reasonable time horizon, I wouldn't go there.
Your comment about recession leads me beautifully to my next question. Is we hear politicians at all levels talking about a possible recession because of these swings in the market drops. These swings are coming because of President Trump's declaration of tariffs globally. How does a possible recession, link to the stock market?
You know, well, typically it's dependent upon how companies are going to perform. People will invest in the stock market. You never buy into a particular stock if you expect it to go down. And so many will look at the outlook for a particular market or a particular stock. For example, if we do head towards a recession, the S&P TSX has 50% in what we call income producing and maybe recession protection stocks, such as financials, utilities, consumer staples, telecoms. They tend to weather an economic downturn better because people have to continue to sort of buy these things, participate in these types of stocks. And so I see a bit of shift moving into that, in that cautionary tone. And there's nothing wrong with that. Rebalancing of a portfolio makes sense at any time you think it gets misaligned to who you are as an investor.
Patty Levitt-Reid, always great to have your insights. Thanks for joining us this morning.
Thanks a lot, Anne-Marie.
If you like that video, make sure to subscribe to the Your Morning YouTube feed, where you can find all kinds of new content posted every weekday morning.